Good morning, everyone. It is February 15th, 2024, and I thought today we had a question in the Discord, and all that stuff's free. You can find the link in either my Twitter bio or I'll try and remember to put it in the YouTube bio as well. Um, had a question on backtesting, creating strategies, and all that sort of stuff. And I'll be honest. I'm not although I enjoy statistics and I enjoy learning about them and trying to find them. I'm not the execution guy in that department. I I'm I, I'm not the one who's running the Python scripts like he is. I think I mentioned in the last video that that name is Rift. That's my buddy who runs that stuff for me, but we do create strategies on on what we want to test together. As far as I know, he runs it through Sierra charts. He exports the data through there, as I think they have the most precise data, and they have a thorough backlog you can easily export. I think he has it down to 1 minute bars or 3 minute bars or something like that, and for our specific data, we largely are looking at the RTH, but we do look at other things like the overnight range, and we also look at correlations. Um, so backtesting strategies, it's not too complicated, I find. If you have someone to run Python for you, and I really think you need either someone to run it for you, or you got to learn it yourself, because the speed of which we can test things is so rapid compared to manually doing it. Um, we were talking to another individual, and they had manually backtested looking at single prints on the Nasdaq, and you have to remember the Nasdaq trades at 18,000, and single prints are watching it to the tick, or shit. At least you're gonna watch it within 4 ticks probably to count it as a single print, uh, and that will just take you forever to go through. So uh, here's an example of something we might do. We might look at a scenario where we might be watching the market and say, you know what? When the IB sets, it looks like if there's no follow through, it tends to just revert back inside the IB. And actually, before I get into that, something I want to mention, and I don't want to give away all the secret sauce and the specific details, but I think it's fine to talk about general things that we've found. And one of them is that the market really does, and this has been repeated numerous times, that the market does follow an auction market theory approach. Um, from everything we've been able to tell, it really does follow that. And I'll give you an example. Here's the ES on the left, NQ on the right. And here we can, let's make this just a little bit clearer. Let's go to a 30-minute chart on both of these guys. Uh, what have we seen so far? Here's the overnight low. The RTH crapped out below it. Uh, Simple stat that's pretty publicly posted everywhere. Now the NQ has a 20% probability of breaking the overnight high. Yesterday, I believe, when I was discussing selecting a product, I mentioned how the NQ is so heavily weighted in the Mag 7 stocks and the ESs as well, and they tend to be very correlated. Well, at that point, you should be thinking to yourself, the NQ is crapping out below the overnight low. There's probably a decent probability that the ES is also going to crap out below the overnight low. Um, and then we'll look that up in the Python data. We'll look up what's the probability of the overnight low breaking on the ES when it does so on the NQ. There you go. That's an example of a strategy we might implement. And we'll run a lot of statistics like this. I've ran a lot. We as a team have ran a lot of these data points, and here I can give you sort of the conclusion is that the NQ leads the ES, and that, in my opinion, you generally want to be looking at things as an auction. You want to be looking at as um, are we breaking the prior day's low? Well, we're probably going to break the T plus 2 low. Okay. Are we breaking a value area low from yesterday? Okay, we'll probably go into the prior day's low. It's very simple auction market theory stuff that you hear. Uh, it is statistically valid, and it's up to you to figure out how you want to manipulate that data to come up with a precise trade. Um, I'll also say this: I've taken all of this data, all of it, and yeah, you can make some, you can find some decent trades off of it for sure. Uh, but what I've found to be the easiest method of trading repeatedly, and I've got the data to back it, and this is perhaps just me, is that I just limit into these levels. And I was long 50-20 today, 50-19 right off the open, wherever that is, right there. That's where I got long, 19 or 19 half, something like that. And I got out here. And the reason I got out, actually, this is where I use the statistics. The reason I got out around that 25-26 area, somewhere around there, I can't remember, uh, was because the Nasdaq was simultaneously crapping out. It was breaking the overnight low, and I knew at that point that look, the ES is probably going to follow it to the downside. It's not guaranteed. I mean, look at it. It broke the overnight high by one tick, but statistically speaking, there's a decent chance at that point, before we broke that overnight high on the ES, there was a decent chance that we crapped out. And about 5 minutes later, or whatever this is, about 15 minutes later, it did look like it was going to come down. And I would have been probably taken out. It wouldn't have gone breaking even, but I would have definitely gotten out when it tried to rally back up. Uh, that's how I'm really looking at backtesting these strategies. Is I take an auction market theory perspective, and then we run the data in Python, and we'll manipulate it. So, uh, for whatever reason, we've found 5 points to be a decent measure of stop losses, take profits, whatever. It just seems to work. I don't know why. It's just a nice number that tends to work. Um, if you wanted to a look above and fail of the IB high, uh, you can play with, okay, how long should it be diddling around the IB high? Should it be 2 minutes, 5 minutes, 10 minutes, 15, 30? Should it be, what counts as acceptance? Is it 5 points above the IB high? Is it seven? Is it eight? Is it nine? Is it 10? And when you have the data in Python, you can test these things very, very quickly. Um, Same thing with the opening range. Same thing with the prior day's high, the prior day's low. You can run these same ideas on various structural levels, and that's the approach we've taken to this, because those structural levels are very easy to look at in terms of a data, in objective perspective. Think of it, if you're coming into the market every day and you're looking at it, it's very hard to go, okay, well, yesterday kind of went up a bit, then down, then it muddied around, then ramped into the close. Okay, the overnight, it looks kind of strong. Blah, blah. It's much easier to say, all right, we pushed down to Tuesday's open, held the open, ramped up to 50-20. That was the highs of these two sessions. All right, looks like we're opening right around the prior day's high. What's the probability of X, right? It's much easier to use structural reference points than it is to use price levels or subjective measures of strength or weakness, and that is why I think you do see such strong reactions off of these structural levels. Here we'll go to a 2 minute, and sorry for the value area madness here. Let's see if this loads. It's a large script. There we go. Look at this. 50-20 quarter. That was yesterday's high. Held to the tick. Held to the tick. Right. Overnight high. Held to the tick. Go to the NQ. Let it load. There we go. What the hell is this? Oh, the overnight high from Wednesday. All right. Held pretty well. Uh, Getting offers at around the overnight low. Getting, uh, lost the open, moves to the close. Okay, close becomes resi on these small time frames. There's an offer. There's an offer. The market, in my opinion, is running off of these structural levels, and simply because it's such a easy way to algorithmicize things. And no shit, the market is very algorithmic. Um, Anyway, that's 10 minutes. I don't really have much to say on this topic other than it would be very useful to have a programmer in hand. It's very useful to think of the market through an auction market theory perspective, at least in my opinion. Uh, and it's up to you to determine what is acceptance in terms of price points or percentages. What are the relevant structural levels you want to look at? And really monkeying around and fine tuning these things. A 5 point take profit is going to be very different than a 3 point. It's very different than a 10 point. It's going to affect the win rates, the R's, all that sort of stuff. And it's not just about. Here's just a simple example. Today is actually a great example. On the ES, we are opening above. Today opened at 50.19 above the close, above T plus 2 highs, T plus 2 open, the low, the T plus 2 low, way down there. So in general, you're going to get kind of a bullish lean to the day. Uh, okay, so in general, I would rather be looking for a look below and fail of the IB low than trying to short it a look above and fail, right? There is going to be small differences that matter. When you're opening above all the prior structure, think of what that really means. That might be a way some people would call that an uptrending market, right? If you're opening above the prior day's low and T plus 2 low and above the prior day's high, think of what that would look on a daily bar chart. Here, that's what it looks like. That looks pretty bullish intraday. Will there be some selling? Yeah, sure, probably. Maybe off of this sort of close area, the close to the high here. But in general, that's a pretty bullish looking chart, and the statistics will lean that way as well. I'm rambling. I hope that makes sense. I hope that helped. That was from 911 margin call. I hope that helps you, buddy. Find a programmer, think of the market in terms of an auction, and find the relevant structural levels, and then just fine tune whatever sort of strategy you're looking at. I hope that makes sense. Hope that helps. Uh, have fun playing in the chop if you're trying to trade this thing. See you guys.